When the government recently told us to get Britain building, the response from some was, well, we will if you show us the money. And among the government's proposals then were plans to attract major institutional investors, things like pension providers, to fund housing developments. But it appears one of our public pension pots is already doing just that, and they have plenty of cash to play with, as Kevin Fitzpatrick explains.
We know there's a housing shortage, and we're told that tens of thousands of new homes are needed in the northwest every year. But where are the funds to pay for them going to come from? This rented property in Gorton in Manchester was built using money from the Greater Manchester Public Sector Pension Fund. It's one of 240 that were part of a pilot scheme to establish whether affordable housing could be a worthwhile investment.
We didn't want to rent extortionately high prices in Manchester city centre. We wanted somewhere that was close enough to commute into for the weekends, or if needs be, whenever we needed to go in there.
They were completed 18 months ago, with half for sale and half for rent. The homes sold out quickly, while the landlord managing the rented properties had no problems filling them.
The demand was phenomenal. We had tenants lined up to occupy the properties as soon as they became available, really.
Under the model for the initial developments, including this one in Wythenshawe, Greater Manchester Pension Fund is asking councils to give them patches of land at no initial cost. In return, they'll be helped to meet the need for new houses, and they'll receive the income from council tax. The pension fund is hoping to build a further 750 homes over the next couple of years.
So this is the living room?
Yeah, lovely, thank you. So how long have you lived here?
About a year and a half.
Yeah, it really gives us a good return and a safe return and a long-term return, which is exactly what pension funds are looking for. And I know that other pension funds are looking at the Greater Manchester model because they've seen the success of our model. Yes, it's creating money for the Greater Manchester Pension Fund. More importantly, it's creating new affordable homes for people to live in Greater Manchester and the North West.
The Greater Manchester pension pot is worth £21 billion, and it's looking to pool its investment money with that of the pension funds in Merseyside and West Yorkshire. Between them, they're worth £42 billion. The intention is to double the amount they currently put into infrastructure, which includes house building, and that could see a further £3 billion invested in that area.
Pensions are, of course, a portfolio of investments. Some of them are in higher risk, high returns. Investment in housing can return more than a bond can, so a couple of percentage points above a bond. So it's a perfectly valid part of that mix.
This site in North Manchester is among those earmarked for the next phase of developments, with a prediction that sites in Merseyside will follow soon. Pension funds building 1,000 homes won't solve the housing crisis, but it could be the beginning of them playing an increasing role in the construction of the region's future.